So if you're looking for a mortgage with only 1 year self-employed in 2025, then this is the video for you. So I get a lot of people calling me. They are newly self-employed and they're trying to figure out how they can qualify for a mortgage. You know, if you're watching this video, you may have gone to a bank, you've talked to a mortgage broker or a lender, and all they know is how to do a traditional mortgage. They put it into the system, and if it spits out rejected, they really don't know what else to do. So in this case, you need to be working with somebody that understands all the ins and outs of how to get what I would call, a non-traditional mortgage, or to do creative financing. And those are really the types of customers that I work a lot with. So let's go over just a few different scenarios where this might be the case. So I have a client, for example, right now. He is not really newly self-employed, but he currently works for a car dealership. He's a mechanic, and he doesn't even get a paycheck. He actually doesn't even get a 1099. He just gets paid cash. Now, he does file a tax return, but it doesn't show very much income. And on top of that, he changed the structure of his business the year before last. Now, under a traditional mortgage, you have to show 2 years of tax returns, typically. In this case, not only does he not claim enough money on his tax return from last year, the year before that, it was a totally different structure and it was a loss. So it's just never gonna work. So what can we do in that situation? Further into this particular client's situation, he doesn't even have a business bank account. He only has a personal bank account. So what we have to do is we have to look at all the different lenders. I probably have 100 different lenders I can work with. And there's maybe 20 different lenders that do these types of non-traditional mortgages. So I do have a lender. They will take 12 or 24 months of personal bank statements. Depending on the nature of your business, they'll take a certain percentage of those deposits, and that's your income. So he had like $20,000 a month in average deposits, and that is cash he's putting in the bank. But we're able to take that. He'll have plenty of income to qualify. And in that case, he's putting down a considerable down payment. Now, it's a gift from his wife, but that's okay. And actually, the interest rate in that case is not that bad. So what's another example of being 1 year self-employed and needing to get a mortgage? So this is actually on a conventional mortgage. This is just a regular vanilla Fannie Mae mortgage. If you've been in business for over 5 years and you file your tax returns, obviously, you can use just the most recent year's tax return and qualify for a conventional mortgage. Now, why would that be good? So in the prior client's example, if you had a bad year, let's say, we're recording this in 2025. Let's say in 2023, it was not a good year, maybe even lost money, but 2024 had a great year. Well, we can just ignore the 2023 return and only use the 2024 return, and you can qualify for a traditional Fannie Mae mortgage, get the regular old interest rate, put 5% down, no problem. What are some other examples? So a lot of times, I might work with somebody and they've, say, worked for a W-2 company, or they've had a regular W-2 job. And a lot of times maybe these are people that maybe were high income earners. Maybe they were even a CEO, CFO, some sort of C-level executive. They were with the bank for many, many years, made a lot of money. And they decided, maybe to retire early, or maybe they got retired early. And now they're a consultant. They have a consulting business, maybe just started the business. So they have lots of money in the bank, but they really don't have any income and hardly any job history. So in that case, you can really use just the money in the bank to qualify. So you can either A, put 20% down and do a no income documentation loan, but that would be sort of the higher interest rate, maybe like 9%. But you could also do a type of loan where you can do what's called asset depletion. So you could take maybe the money that's in the bank, divide by 60 months with some of the lenders I work with, and whatever that average is, you can use it as income to qualify. There's also different ways to qualify where if you have X amount of money or X percentage of money of all the debt that's on your credit report, you qualify. Long story short, a lot of times your money that you have in the bank or in some sort of retirement account can allow you to qualify. What's a scenario where, let's say you've retired early. When I say early, you're over retirement age. Maybe you're 60 years old, you're at least 59 and a half, and you have a sizable 401k. So this is a retirement account that was, gained value while you were working for a company. So it's job related. So the guidelines say, and this is for a conventional mortgage, that you can use a distribution from your retirement account to qualify. And that could just be a one-time distribution. It doesn't even have to continue. It just has to continue for at least 3 years. So in that case, if you have a 401k, you're over 59 and a half, you could take whatever the balance is in the 401k, divide it by 36. That could be your monthly income, get a regular conventional mortgage. So really, I think the overall message of this video, if you're 1 year self-employed or less and need to get a mortgage, then there are ways to do that. But it's going to take, a good credit score, some money, right? So on the loan we were talking about where the self-employed mechanic who put cash in the bank and you're using personal bank statements, the minimum down payment on those types of loans is 10%. So you're gonna have to have at least 10% down plus enough money for closing cost. And then what's really important on these non-traditional types of mortgages is reserves. So some lenders might only require that you have 3 months worth of mortgage payments in the bank after closing, just to show that you can, make mortgage payments. But some lenders might require 6. They might require 9 or 12 months. It really just depends on your situation, and a lot of times that has to do with your credit score and the amount of money you have to put down. So anyway, there is hope. If you're newly self-employed and need to get a mortgage, if you found this video helpful, it would be really helpful to me if you'd hit like and subscribe and share it with a friend that might have a need for something like this. If you would like to get pre-approved for a mortgage, go to my website, mortgagesbyscott.com. You can fill out an application, or you can just fill out a form. Email will come to me, tell me kind of what's going on with you. Myself and my team will get on the phone with you and put together a plan. Thanks for watching. Until next time.